Good afternoon, everybody. Welcome to the Monday edition of the TraderMerlin Show. Hope you had a fantastic Thanksgiving, spent some time with some loved ones, some family, friends, and just are now recovering from your extended food comas. Now, back into the full swing of things. Obviously, Thursday markets were closed. Wednesday, we had a half a day, and now we'll be back to full strength, which means volume will start to kick back in this week. Maybe get some more sense of direction. And I thought it would be interesting to do kind of a show on what some of the looming issues might be. There are definitely some problems going forward, and I think one of the challenges for me personally in my allocation of capital at this moment in time is, am I bullish on the market going into the end of the year for the Santa Claus rally and the holiday shopping, or am I bearish based off of some other factors? And I got to be honest, I'm still kind of teeter-tottering back and forth. My gut tells me we'll probably see a rally for the holiday season. However, today's topic kind of is more leading into some external, maybe black swan type of events that could prevent Santa from showing up this year. So I got this graphic up here, kind of threw something together I thought might be representative of the discussion, and it says the market's big problem. And as you guys know, Apple is a major part of the S&P, it's a major part of the NASDAQ, it's actually a smaller part of the Dow, but it's in all the indexes, and it's been the juggernaut that's been pulling this market up. So I decided to do the Chinese flag, but instead of stars, I used the Apple logo on that one. And why? Because the market at this moment has a huge problem. We saw this happen back in 2000 when we started going into lockdowns, right? We went into lockdowns, and all of a sudden companies were unable to produce products. We saw ports being shut down, both in China and here in the US and just around the world. And that created all kinds of supply chain disruptions. You had chip shortages, and it was an absolute mess. The question now is, have we remove those bottlenecks, or are they still lingering and now starting to get more persistent? And that's what I'm going to focus on today. So, not everybody, but many of you may know China has a zero COVID policy, which basically means if they detect one case, they're shutting everything down around it. So let's say I worked for Online Trading Academy. Let's say if we were in China, if I had COVID and I worked at Online Trading Academy, they'd shut everything down. They'd be testing everybody. They'd be putting people into quarantine. And they would continue to test. And if there's any testing of other people with COVID there, they'll shut it all down. And they'll put lockdowns on businesses to make sure that COVID doesn't spread, which is a bit aggressive. And right now, you're seeing not only the zero tolerance for COVID, still in effect, you're seeing protests about this. And this is causing more supply chain disruptions. And of course, one company that gets just about everything that they make from China is Apple. And Apple was part of the reason we saw these markets slide today. You notice here was down 2.63% on the session. Still not a horrible chart, right? Apple, well, for all intents and purposes, is just consolidating here. That's why I drew these blue lines. I kind of anticipated just bouncing back and forth. However, in digging through, and I did not spend a ton of time on this, guys. I did not dig deep into the numbers, but at first glance, I look at these numbers for Apple. A ton of product is coming from specific areas where the protests are very big, specifically a company called Foxcon. And the estimates are that Foxconn is going to produce 6 million units less than demanded by Apple, which right away should tell you something that could be a huge problem here for Apple going forward. So if Apple is going to receive 6 million less units than they anticipated, there's no reason for me to poll you or ask you what you think is going to happen to Apple's earnings, right? Apple's earnings could really start to take a hit. And when we look at this price chart, Apple, let's just put on a weekly time frame so we can see a little bit better here. Apple is still holding a lot of value after that gigantic pandemic run-up. And now, all of a sudden, you're faced with a picture where China may significantly impact it. That's 6 million units less. And from what I was reading, the iPhone 14 Pro, which is going to be their new flagship, most expensive model, a lot of it's coming from Zhengzhou province, which is basically shut down right now. So if you're looking for an iPhone Pro and you go to Verizon or AT&T or T-Mobile and you're like, oh, great, I see your ad saying that if I transfer over my phone, I get a free iPhone 14. Awesome. Well, yeah, you may get that in a few months. I noticed a lot of people, I actually was looking at it and they said I can get mine in January. It's like, okay, well, I'm switching my phone now, so I kind of want that phone right now. But now I'm hearing grumblings about, hey, it could be March or even later for that to happen. So the reason I had this somewhat gloomy graphic here, the market's big problem, is, in fact, Apple itself. Now, I think there's going to be a lot of other businesses, specifically a lot of electronics that are going to be hit by this as well. Certainly, a lot of chips and technology pieces coming from China. However, I think Apple will probably be the biggest hit. And this is why I think that we have an issue or an argument for a gloomy going into December and possibly even January, specifically for Apple here. Now, if you're looking at Apple's chart, I've got a whole bunch of lines drawn on this one, but I would say if Apple gets down below this 129 mark, I think that then this belief of consolidation between those two blue lines is going to disappear, and you'll start to see some pessimism come into the picture. Now, here's some of the reason why I think it's so important. This is the percentage weighting of the NASDAQ 100 companies. So, of course, many of the suggestions I'll make is don't trade individual equities, trade a diversified portfolio of securities, therefore you spread around the risk. However, Apple right now is the single biggest component in that NASDAQ 100 at 13.4%. Now, Microsoft has grown significantly. They probably will not be as impacted as Apple will from a zero tolerance policy in China or any lockdowns that may happen, but they'll still get hit. However, Apple being at 13.4%, and that's dropped in the last day or a couple of days, if they do start to fall more significantly, that could bring down the NASDAQ to a much bigger clip. And I did buy more, so I closed out a few days ago my put position on the triple Qs. I held it on SPY. I reopened my position this morning on the triple Qs as we came back up into supply. It was perfect. We came right back in and closed the gap. I'll show you that one. And ended up buying 30 puts going out into January. I probably should have gone February, but it was early and I just decided to go January. I'm not sure why I decided January. But anyway, so that's your Apple weighting of the NASDAQ 100, which I think is dangerous. But then let's go look at something that's far more diversified. S&P 500. It's the heaviest component by a good margin in the S&P 500 as well, at about 6.6%. Now, if Apple starts to hear more grumblings about China lockdowns, protests, Foxconn closing, or other production facilities, and they're not going to be able to produce their iPhones like they were, then I think you're going to see a lot more downside here for Apple. Now, of course, long term, I think we'd all agree Apple's not going anywhere, but maybe I can go out of the money and be selling some deep out of the money calls as fear starts to rumble in here and potentially buy Apple at a much, much lower price. Now, if Apple tanks, let's say, for example, I don't know why this horizontal blue line is there at $85, but let's say Apple, has a real aggressive slide and makes it all the way down. Heck, even if it makes it to here, to 119, right? We're currently trading at 144, but if Apple falls to 119, just let's look at the percentage slide here. Knowing its weighting in the NASDAQ, that would be a slide of roughly 17%. If Apple slides 17%, I think it's safe to assume that the NASDAQ 100 would probably drop a significant amount. Remember, it's over 13% of the NASDAQ 100. So if Apple drops 17%, NASDAQ 100 could drop 20%. Given its weighting in that index. So kind of nerve. Actually, no, it wouldn't drop 20%. It would drop a little bit less because the other ones would balance it out. So the NASDAQ 100 would drop less, but still have a precipitous slide. So this to me is the market's big problem going forward. If I had time to run a poll here, I'm curious knowing, and I would probably say not till the end of the year. I don't want to do like a Santa Claus rally, but let me see if I can type in a poll here real quick. Let's see. What poll do I want to make? Let's see, it's November, so we'll go December, January, February. I'm going to do 3 months. In 3 months, 3 MONTHS. We'll do NASDAQ be higher today. There's your question. And I apologize for my spelling. Doing this at the same time is a little tricky. So there's my poll. In 3 months, will the NASDAQ be higher or lower than today? I'm going to say the NASDAQ 100, as I should have said there to be correct. I know a lot of people are very optimistic over the Santa Claus rally, and I think that there's certainly some merit behind that one. And it's funny because I actually do have I'm long heavily on the puts, and I'm also long on the ETF. However, I'm just been selling call options against my QQQ position that I have the physical of, which is only 200 shares, so it's a small position, but generating some income there, some premium there. David says, Cordell said, which one? It's the NASDAQ 100. Will it be higher? I think I wrote in there. Will it be higher or lower in 3 months? So by the end of, we're in November, December, January, February. By the end of February. And it's interesting also, we do have statistically a ton of evidence that shows that the NASDAQ or the markets have a Santa Claus rally more often than not. However, Answer has to be yes. It will be higher or lower. Oh, did I mess it up? Sorry. Let me end the poll. Thank you, guys. This is why, trying to do this stuff live is tough. I wish I had TJ here to help me do it. Let me cancel this poll. Hold on. Oh, I'm an idiot. Let's go. Start a new poll. And I will say, will it be higher? There we go. We'll just leave it there. Done. Okay. There we go. Thanks for the correction. My bad. Yes, it's certainly going to move, Drew, Dave. It will definitely move by then. I'll put my stamp on this one in just a second, but I'm going to wait till you guys post your thoughts. No, John, not today, my friend. I usually don't drink during the week at all. On Tuesday night, sometimes I'll go to trivia and have a beer. Maybe on Thursday as well, I do trivia. But Friday is the only real day I'll go out there and have a drink. Anyway, I thought it might be just food for thought for everybody here as you start to position yourself going into the end of year. I do personally think that this is going to be a pretty significant problem for Apple. And I don't know, as far as Microsoft goes, is it going to really impact Microsoft? Is it going to really impact Amazon? Not as much, I don't think. But the bulk of the products that Amazon sells, made in China. So any real disruption there could cause some significant problems for their bottom line. Of course, we'll have to wait and see. Good question from Tom here, which I'm not sure. How much of their Apple's profit comes from iPhone versus subscription fees? I don't know that, but I know it's not just the iPhone that's being impacted. It's MacBooks, it's iPads, it's basically anything manufactured in China is going to start to have an impact there. No, John. No, it's not. I am drinking, but this is straight H2O. All right, so you guys seem fairly split. Some say yes, some say no, and that's the beauty of trading. We'll ultimately see in 3 months what happens. I'm going to put my mark, and I have a little notepad here of all these numbers. Remember, in January we did a poll to see if the S&P is going to be high, or what S&P price would be for the year. I still have that poll, and we'll do that on the final show that I do for this year. So I'm going to say down in 3 months. And just primarily, I just think that you're going to see more fallout from what's going on in China. Not only the protests, which are causing disruptions, but here's another chart for us to look at, which I think throws a little bit of a wrench in the works. This is the COVID cases rising in China. So these are confirmed coronavirus cases in mainland China by week, starting from January going through November. And you can see there was a surge in April, but all of a sudden, just the past couple of weeks, a massive surge in the number of COVID cases rising in China. And now you have all the people protesting saying, hey, listen, we don't want these lockdowns. Even though we're getting COVID's out there, let's just move past it. So curious to see how this continues on, because if we do continue to see this surge, this may start to push the ports to close. It may further disrupt the factories that are manufacturing these goods and services. That Apple could be impacted significantly by. So thought I would share that with you. Again, just food for thought. Make your plans accordingly. Why do we have 30 votes and 14 likes? I don't know, Christy. I don't know. All right, here is the results of it. And again, it's pretty evenly split. Got 55, 45, 55, or 54 saying, nope, it's not going to be higher. And then 45% of you saying, yes, it will be higher. So we've got a couple of bulls, we got a couple of bears, and ultimately it doesn't really matter which side you're on, because the markets are going to do whatever the hell they want to do. So anyway, that was my quick little piece there. And I know somebody was commenting that I do clickbait. Well, I don't think it's clickbait. We're talking about Apple, and we'll be watching Apple's price chart here over the next couple of weeks as this story may start to get a little bit bigger and bigger and bigger. Now, John says, besides China, there are a lot of other headwinds for the NASDAQ. Sure. And we've talked about a lot of those headwinds, but I think when you look at a company like Apple, it's paramount for Apple to be receiving products to sell from China. Now, Tom makes a good point. To what end is their business revenue coming from subscriptions, right? How much is coming from Apple Music? How much is coming from Apple TV? Is there a lot of money? Is a bulk of the revenue coming from those services? I don't know that, but I do know that when you have 6 million units less than expected, and the average cost of those phones is going for $1,000. I'll let you guys do the math here. Actually, I'm not going to let you guys do the math. I will just go over here to the screen, and if Foxconn says they're producing 6 million less, and each one of those things is costing $1,000, that is $6 billion worth of revenue gone. That's $6 billion worth of sales that are just going to disappear. So not disappear, but just be pushed further down the earnings cycle. And maybe they get back up to speed in the next quarter. Maybe they get back to speed in the second half of 2023. And who knows if China actually does go crazy and shut everything down. I don't know. But it does seem like that issue is getting more and more contentious over there in China. Just as are the polls being calculated by Twitter, that explains the likes. You're funny. No, these are done by, I think, YouTube Studio. There we go. If I had a direct connection, Pepe, with Elon, I'd love to talk to Elon and interview him. He's one of the very interesting cat. I'm curious. I would love to interview him someday, but I'm a small fish. I'm not going to interview those big guys. You kidding me? All right, now let's see. GD says, bring on David Hunter, a contrarian, who says S&P could go to 6,000. Nice. Well, before the 80% drop. Look, and that's the beauty of the markets, guys. There's always someone out there. I've tried not to be overly forceful in my thoughts on which way the market's going to go. I can make a list right now and give you arguments for bullish. I can give you arguments for bearish. This is, to me, is a wild card piece that's outside the norm, right? The norm is we rally during holiday, we're rallying into the first part of the year, and then as goes January, so goes the rest of the year. I just think this is it's a discussion piece that we should be looking at, because if it does start to create problems for Apple, then there will be a contagion in tech. And if the tech contagion does spread, then that will be mean a much bigger down move for the Nasdaq, which is fine with me. I'll have a bunch of puts in place, and do I see the Nasdaq dropping all the way down to 10,000? Sure, no problem. I think 10,000 would be no problem whatsoever on the Nasdaq 100 futures. Now, do we get down? Let's look at QQQ. I think it's easier for most people to. Do we get down to some of these demand zones that started off back in 2020? Yeah, it's possible for sure. I mean, we already technically are at some of those demand zones, but do we get down to? There's nothing that's really great on this one. You have some unfilled gaps back at 200 on the QQQs, but I will hopefully be riding whatever momentum Apple gives us and whatever the markets decide to go. Hey, yes, cheers to whiskey. If Apple deplatform Twitter, Apple can say goodbye to a lot of Republican buyers. I don't know. Do you think people really hang their hats? So I think that if you're a Republican or Democrat or Independent, you're going to look at it and go, man, I just love my iPhone. I don't know. I don't know if the party platform makes it. On some things, you're just going to buy it no matter what. But all right, let me go into let's do a rundown of the markets. If you guys have other comments, feedback that you want me to look at for this specific topics, then let me know. I'll see if I can tackle those. But I think it's definitely going to be a major talking piece over the next couple of weeks as these protests continue to get bigger and bigger, and conflict in China internally could create bigger shutdowns, which could impact the market. So I do expect. I was kind of feeling the markets would rally for the next few weeks. I kind of feel like over the next week or two, if this does continue in China, you're going to see more downside movement. Just my 2 cents. All right, start at the bottom. Bad news today for typical bad news bears, which is Bitcoin down 1.9%. Had a lot of gyrations on the weekend, but really going nowhere again until we get the FTX solved, which is not going to happen overnight. More pressure on the downside for crypto, and I'll leave it at that. For those of you who are in the crypto space, you saw that BlockFi filed Chapter 11 today, which means they're going bankrupt, which was absolutely no shocker. And I will reiterate that if you are having money on a cryptocurrency exchange, pull your money off and go to cold storage where you control the private keys and you control the crypto. Stay away from exchanges if possible. All right, moving up the list, Russell 2000 down 1.87% today. And you look at the number itself, 1.87. It sounds so dramatic, like, oh my gosh. Really no big deal. If you look at the move we've had since late September of this year, we still are making higher highs and higher lows on the Russell. So all in all, looks great, right? It's still just looking fine. This is a pullback. It's if we start to get down below, let's say 1820, then all of a sudden your targets have to be down around 1760. So there are some big stopping points here, right, very close to where we're at. But if we break those, more downside. Now S&P. Actually, in my opinion, looking better than the Russell, which is bummer because this is the one I've got a bigger short position in. I was down 1.5%, closing at 39.70 today, a 62-point slide. But notice where it came back to, right? I've had this yellow box drawn on here, and that was kind of the turning point. Thought it would stall there and start to sell off, which it didn't. It actually rallied up and then broke down, and now we're retesting that. So maybe we'll get our breakdown here shortly if it doesn't stall right at these levels it's at. 39.64 is kind of where I have that dashed line, and we're at 39.70. So to be right in the middle of that. What was supply now becomes demand. It's the old belief system out there in the trading world. All in all, 1.5% slide for the S&P. Dow, 1.44%. It's the best of all four indexes overall from a trend perspective, although giving back a little bit of the gains. But, it's really no big deal considering how much it moved last week. You had some very significant moves in the Dow last week, one of the better performing indexes, so giving back a little bit of it. If we get back down maybe to this 33,733, or I think this 33,255 number kind of still stays there. If we get back below that, then we'll see this trend potentially reverse. But right now, trend is up. Keep riding it. NASDAQ, down 1.35%. It's the weaker of the group. You notice that it's really had 2 weeks of just sideways action, chopping back and forth. My gut tells me that with the Apple news and a little bit of contagion fear, we'll probably see this NASDAQ drop back down to 10,750. Which is the middle of that demand zone that's been there for a while. And again, it's not the best demand zone, but it is a turning point where we've seen the NASDAQ turn around in the past. Let's go to gold. Yes, gold. I'm out of gold, so I'm not worried about this one anymore, but you had a pullback today of 0.78%, dropping it to $17.40. Slide of $13 per ounce for gold. Technically, nothing really to speak of here. I actually was anticipating it dropping deeper. I thought we'd see gold fall down around 17.15, somewhere in that area. We got close last week, came all the way down to a low of 17.19, bounced up, and right now, technically not really telling me too much. And finally, crude oil, your one positive piece out there. 1.26% gain up to 77.24, a 96 cents increase, so almost $1 increase in the price of a barrel of oil. But you look at that picture, it's due for a little bit of a bounce, right? It's due for a little bit of a bounce up and then come back to a supply zone and most likely sell off based off of what the overall trend is. But we did make some new lows, which is a very bearish sign for anybody who's long on crude oil. All right, what did Tom say? If Apple bans Twitter app, it's not that hard to use something called responsive design and use Twitter's webpage as an app. Yep. Yeah. It's interesting to me that there's even the talk about them dumping Twitter. I mean, it would be a really stupid move. I don't know. It's very political, but I think it's a pretty stupid move for Apple to do that, because if you do that, then you're basically waging war on Elon Musk and financial backers. So remember, it's not just Elon Musk. Elon Musk as investors have gone in with him on this, and by doing that, it would be a declaration of war against Twitter. And of course, Elon Musk does have a lot of power. He has a lot of connections, and I could see that creating some problems for Apple. Now, does Apple have their own social media platform? If Apple had their own social media platform, then I might see a more logical reason for them to want to ban Twitter, but I don't know. I don't think it's going to happen, but there's so much track about that piece right now. I certainly wouldn't want to have Elon Musk in my enemy corner, that's for sure. All right, let's see. Merlin, which do you feel is stronger, the Dow driving other indexes up or the QQQ pulling? I think the QQQ pulling them down. So remember, the Dow is not, in my mind, the Dow is a weak horse. The Dow is only 30 companies, and to me, it's not a broad representation of the market. The NASDAQ gets a bit more diverse. The S&P is very diverse. And then, of course, you'd have something like the Russell 2000, which is small caps. If you're looking for the broadest measure, actually, you guys tell me. In the U.S., which index is the broadest measure of our markets? So if you were to say, I'm going to buy the market, period, which index would you use? If you say the Dow, we have problems because Dow's only 30. But what do you guys think? Just curious if off the top of your head you could tell me which index would be representative of the entire market. I'm sure many of you are going to know this one. No, Dow is market. You're quizzing me on my. Dow is market cap weighted. So if you get a bigger market capitalization, it's going to have more pull. So it's not as evenly weighted. Oh wow! I thought that no, the SPY. No, maybe I'm not being clear in my question. It does not have to be one of the ones I measured because it's not the S&P. The S&P is not the broadest market measure. Tom says the Russell. No, Russell 2000 has 2,000 companies in it, but they're small caps, which isn't. You kind of want to go with the big caps to represent a market. It's actually be the Wilshire 5. There you go, Ken. Ken nailed it. So Wilshire 5000. So the Wilshire, if you say I'm just going to buy the market, you buy the Wilshire 5000. That's supposed to be everything, right? It's not even 5,000 anymore. Is it price weighted, Eric? I thought it was market cap weighted. You're right, because you have something like Goldman Sachs was the biggest piece in there for a while, and they were really heavily weighted. So yes. But the Wilshire 5000 is the one that's supposed to represent the entire market. Of course, nobody really ever trades a Wilshire 5000, but that would be the broadest representation. To me, if I had to say pick the ETF that represents the market, I would go with SPY. I would say SPY is the dog that wags the tail. You get the big stuff. So it is price weighted. Cool. And I actually have that over here. So just remember, we talked about Apple being, here's Apple at 13% of the NASDAQ. Well, it's 6% of the S&P. And then here's the Dow. And you're right. You guys are right. For some reason, I thought it was market cap, but you're right. It's price. You can see United Health Group, which is $527. It's the heaviest weighted in there. And Apple, well, wee little Apple, it's only 2.84% of the index, and it's trading 144. Yes, so it's a total price weighted index. Yep. Exactly. So when Apple did that, because Apple, if I'm not mistaken, I think Apple at one point was like 20% of the Dow. It's like, whoa, wait a minute. And then they did their split, and all of a sudden it, there is, I don't know, Lisa. It's one of those things that I used to pull up the Wilshire 5000 index, but I can go over here. You can probably bring it up. Let's go here, and I'll just type in Wilshire. Let's go indices. There's a, I don't know what the completion index is. It should be the Wilshire 5000, but there really isn't. Sure, John, happy to pick up around. Let's do it. It's holiday season. Give the gift of free drinks. So I don't know if there is a Wilshire 5000 ETF or what, but I'll have to dig up that one, Lisa. I don't really look at it anymore. It's one of those things that, to me, when I say a market or the market, for me, the market is the S&P. I don't look at the Wilshire, but it's one of those useless trivia things, right? It is the Wilshire 5000, the broadest measure, but no one really looks at it anymore, and it's not even 5,000. It's funny because the NASDAQ 100 isn't even 100 anymore. The Russell 2000, I'm not exactly sure the count there. The S&P 500 is not 500, it's 503. Dow Jones Industrial Average is 30. I think it's still 30, but they change. I'll find it for you, Lisa. I'll find it. Off the top of my head, I can't remember it. All right, let me, well, there were two other things I wanted to look at. Oh, we talking about the dollar, but the dollar really didn't do much. It's just kind of still hovering. I kind of anticipated this bouncing a little bit more and having a stronger move back up towards that 114 level on the Dixie, but didn't quite, it had a nice day. It was up 0.58%. We'll see if it continues to rally. The other piece here was this inverted yield curve. This is the 10 and the 2. The one that's of interest to me is this 10 and the 1, which is now over 1% and getting worse. And again, historically, we've never seen anything like it. I mentioned this before. If you look on, let's say, the weekly here, you notice the last time we were inverted was back in 2019. That was in August. And that was a slight inversion, lasted for a few weeks, and then popped back up. Well, not only are we not bouncing, but we're actually getting worse and worse. And if I look at the 10 and the 2, we've never been this extended below or this inverted. So I think this is another really interesting one for us to kind of keep an eye on going forward, but nothing is going to really impact us today. So I'm going to go to a couple listener questions here. What time we got? It's 4:29. Here is a question from Jeff. He says, most of the IPOs I'm familiar with are ones that are basically like new startup companies in a hot sector like EV, crypto-related technologies. I'm thinking the company I work for could be going public in the next year or two. It's a $25 billion a year company. How does such an IPO work for an established company that has been in business for 50 plus years? Can you think of any examples of other companies that were successful and had an IPO? Does price action work similarly with startups? Yes. So, generally, most companies have to have a historical track record. So it's not like they're brand new startups. They generally have to show I think it's 2 years worth of earnings and financial statements to be considered for an IPO. They have to go to the exchange. They have to go to the SEC and file all these documents that show their earnings and really be as transparent as possible. So the way that a 2-year-old company would function versus the way that a 50-year-old company would function, completely identical. They're just going to go there. They're going to show their track record. They're going to show their financials to the SEC and fill out all the different requirements. And once that's done, then the real dog and pony show happens. So it's not necessarily about the company itself when it comes to an IPO. It's the sales process behind it. And I mentioned this before. If your company, let's say, Twitter's private, right? Someday, I'm pretty sure that you're going to see Twitter go public again. And it may be in a different ticker symbol, but Twitter will probably go public again down the road, and they're going to do an IPO. So think of that like your company, Jeff. It's a company that's private, making good money, and they're going to come public again. Well, what happened is they'll go to an underwriter. The underwriter will basically say, we're going to value your company at X dollars per share. Let's say it's $10 per share. So essentially what happens is the underwriter and his backing firm, could be Goldman Sachs, Morgan Stanley, will say, okay, you're worth $10 a share. Whatever we can sell at above $10, we make money. So they'll go out there and they're going to do every single thing they can to promote that company. And they'll get on CNBC, Fox, Bloomberg. They'll be on Jim Cramer's show. Hell, they'll probably even try to get on my show and pump their security just so you buy the IPO. And then typically what happens is you get a jump up early on, may go up for a week or two, and then they generally come crashing down. So that will probably be what happens, which is why most IPOs have a lockup period, so you can't sell for a specific window of time. And again, it depends on the company. Some are 90 days, some are more than that. And generally when you see that window of time expire, the vesting period, if you will, then all of a sudden insiders like yourself, if you work there, you'll probably get some shares, would ultimately sell their shares and it will drop in price. So really no different in process. If a company's been a private company for 500 years and they go do an IPO, same basic process as if somebody's a tech company brand new. Hope that helps. Jeff, I'm getting a double whammy today, Jeff. I get both of yours. He says, with some of your recent comments in crypto, where would you suggest a buyer of crypto to purchase from? I mean, it depends where you're at. If you're in the US, I would use Binance.us, I would use Kraken, and I would use Coinbase to buy it. But number one, I would use Binance because the fees are cheaper. So I would use Binance to purchase it, and then I would move that off as quickly as possible. So I have some still over at Binance that I'm keeping there because it's locked. I have my Ethereum there. But I've moved pretty much everything else off of those exchanges to cold storage. And our last Thursday session or Wednesday session for my CIO program was moving from those exchanges to cold storage where you control the private keys. And then I did staking from those devices so you can earn yield on that. We're see when they went public, price went up right away and then down below IPO price. Yep. That's true. So Tom says there in the end of this, his valuation of non-hype companies is really based off of growth of earnings, no great price jumps. I think you'll still get a price jump because it's pumped, but it's not going to be anywhere near as much as a brand new tech company, right? Because the tech company may not have that much of a track record and earnings history to promote. So it's all speculation of these new tech ones. But you're right. If it's Steelcase is a good example, fairly mature company. They're not a tech giant. It's not the world's going to get steel cabinets for everybody around the world. This is it. We've hit the mother load. They'll be looking back at what do the earnings look like for that company. So you'll probably not get as wild of swings. Yes. And the more speculative the business with the more growth prospects, the more high those initial IPO prices are going to be, the gaps. All right. Yeah, Michael. Me too. All right, last one about crypto, and I had to just address this one because it's one of those questions I get a lot of times from people in the CIL and anybody outside. The good news is I had a small group of friends for Thanksgiving, and I didn't have to answer a bunch of hostile cryptocurrency questions. But this one, it deals with adoption. And a lot of people think that crypto is a scam. You're not going to use Bitcoin to make transactions, and I agree with that. So let me read this question for you because I think many of you might be wondering about this as well. Les says, I have a question about buying something with Bitcoin like a cup of coffee. How does that work, including how the coffee shop can use my payment to pay their bill? The value of Bitcoin keeps changing. So what happens if there's a drop in the value of Bitcoin from the time I order my coffee until the time my coffee gets to the coffee shop gets my Bitcoin, pays the suppliers? I do realize that the cost of a cup of coffee is just a fraction of a Bitcoin. Of course, the way the price of a copy is going up and Bitcoin going down, they might be equal in value soon. Yes, I thought that was pretty good. Okay, so here's how it would work. If I were to use, let's say, go to Starbucks, I order my iced mocha frappuccino with soy milk and latte and 2 pumps of cinnamon flavor and however, you just order a freaking cup of coffee, people. It drives me nuts. I would take my app and I would scan it there if they allowed point of sale. Of course, Bitcoin takes like 10 minutes per block, so it would be forever. It would be a waste of time. What you get now are what are called layer 2 networks. So Bitcoin is slow and cumbersome, but incredibly secure and safe. Layer 2 would be something on top of that, like the Lightning Network, which can be incredibly fast, just a second per transaction or maybe less. And it's basically setting up a payment channel through a third party. So there's an app out there called CliK. And the way it could work is Starbucks would say, all right, we're going to allow CliK. We're going to partner up with CliK, kind of like they would partner up with Visa. And every transaction, CliK would get a very small piece of the action. I mean, very small. You have to pay per transaction on one of those ATM or Visa machines in a store plus 3%. The merchant loses that 3%. So if you use CliK, and I buy a cup of coffee from Starbucks and they allow CliK as well, it's up to the business to say how they want that money received. So there's apps out there, and I really think this is a genius idea. Whereas as a business owner, I can say I accept any cryptocurrency. You want to pay with Dogecoin or Shiba Inu or these scam crap coins? Okay, you can pay with those. And what I can do as the business on the back end, I can make a choice. I can either say I would like to keep whatever cryptocurrency they pay with as is, just put it into my account and I'll keep that. Or you can set it up where it automatically, the second that customer pays with Bitcoin, Litecoin, Shiba Inu, doesn't matter, it automatically converts to dollars, or you name the currency. You can have it convert to dollars, into yen, pounds, rubles, whatever you want. CliK can do that. So to me, this from a merchant perspective, I kind of feel it's stupid for merchants not to be using this, because when you open the door to any cryptocurrency payment system, meaning Bitcoin, Litecoin, Ethereum, if you say, hey, you can pay with any crypto you want, you're now ushering in a whole slew of different business. And you're bringing people like myself that go, you know what, I want to grow the ecosystem. I don't use this crypto, I'll pay with that one. And the conversion is done by CliK. So CliK would take my Bitcoin, convert it to whatever the Starbucks wanted, and then it's done. Transaction's there. So your point is very valid, Les, which is it'd be crazy for a business to do business in Bitcoin, accept Bitcoin for payment, and be subject to these massive fluctuations that you see in price. But if they took it as payment, and as the payment was being processed, it was converted and then put into the currency of my choosing, then I think you've eliminated the big risk to the businesses from a monetary perspective. This is something I've been trying to get Online Trading Academy to do. I was like, listen, we teach a crypto course. Why don't you set it up where we can take payments for classes in cryptocurrency? It's non-refundable. They can't cancel out transactions. It's quick. It's easy. And his concern was the volatility. And we were looking at it, but there's a lot of other things we're trying to get back on track over at OTA. So it may be coming in the near future, but I think you'll see more businesses adopt a software like CliK, which will allow these businesses to accept cryptocurrency, and those payments would be instant, right? It'd be just as quick as a Visa or MasterCard. So there you go, Les. Hopefully that answered it. Today, there's no way that I would ever consider taking my phone and trying to buy Starbucks with it. I use an app, or I have an app called Bakkt, B-A-K-K-T, where it was a SPAC. This one, I think, let's see if it's still here. I haven't followed it since. B-K-K-T. Yeah, look at this thing. Wow. Man, you guys remember this one? I was talking about this way back here in 2021, and I had bought some at 15. So I was in at 15, and as it had this huge spike, I sold all mine at 17, made $2, a little over $2 per share. I had 1,000 shares, so $2,000. Unfortunately, kicking myself because it rallied all the way up to a high of $50, and now it's trading at $1.63. And honestly, it will probably go to zero. This app, this was the absolute bait and switch. Bait and switch is what this Bakkt company did to me. Happy said, Merlin, I thought you always pay with credit card and get points. LOL, by the way, when are you bringing your friend on the show? When he gets back from Asia. He's just traveling through Asia right now. But you're right. It's funny because I use a Bitcoin credit card. It's a Visa card, and because of what happened, the credit card is no longer working. So I'm now shopping for a new Visa card because I like to have one of each brand. So I got Discover. I don't have American Express, but I have Discover, Visa, and MasterCard. I always have one of each of those. And I'm shopping around right now for a new Visa card. And really, I'm looking, what's the best deal for me? I want to do more traveling here in the near future, so I'm probably going to use the either Chase Preferred card or go back to United because they have a nice special right now with, I think, 75,000 free miles. But yes, I do pay for everything with credit card. However, I do have some crypto that I don't really care for, and if I can pay with those at merchants, why not, just to help grow the ecosystem. Maybe you can show on zombie stock. It'd be a long show. I think there's a lot of zombie stocks out there. Tom says, I've had a little cash come into Venmo account and move to Bitcoin and Ethereum. Could I use that to buy anything using Venmo? No. So the thing that sucks about Venmo's app, not only is it's stuck there, you can't really you can't do anything with it other than sell it through their app. You can't move it anywhere else, which is really unfortunate because I like that feature. They also charge you 1.8% commission on your transaction, plus they widen the spread. So to me, that's a big problem of buying on Venmo. But maybe, I think in the near future, Tom, that may become a possibility. I think that once we get legislation about crypto, about exchanges, about stablecoins, we have some clearer understanding of what the rules are for crypto, then companies like Venmo or PayPal won't be as intimidated by it. I think that they're kind of freaked out because they don't want to get involved with crypto from a transaction perspective because the government might be able to shut them down or come after them. So I think they're setting it up by saying, oh yeah, you can buy crypto on Venmo, but you can't do anything with it. In the near future, I think they probably have the piping done right now where it'll be there. And you can say, oh, I'm going to pay with my Bitcoin, set up that way. I can sell it and use it as USD. Correct. Yeah, but you can't transfer it out. You can only buy and sell within that Venmo app. Unfortunately, you can't move it out because I was going to do that, but they're like, you can't move it off. It has to stay on this app. I'm like, I don't want to have it on the Venmo app. I want it in my cold storage wallet. Fidelity 2% cash back. Yeah, Fidelity's not too good. If you go Discover, you get 5% cash back. And then if you use the Chase Preferred, I think it's a preferred card, you get 10 times the miles that you spend on flights. So if I buy let's say I buy a ticket to Asia, it costs me $1,000. Well, I get 10,000 miles for that, just for purchases. So if you want to rack up some quick airline miles, that 10X is a really good one as well. But I'll let you guys know which one I decide to. It's going to happen probably this week. I need to get a Visa card, run and get it up and running. All right. Let me run through the economic calendar. It's just the econ calendar and maybe earnings calendar for tomorrow because today's was really, really boring. And Chuck, I try to shy away from Wells Fargo. I have a Wells Fargo card, but I don't use it. I try to shy away from the big banks. I shy away from Bank of America, Wells Fargo, Citibank, and I guess a necessary evil because I have accounts there. But here's the calendar for tomorrow. Kind of a big day. Intuit, obviously a pretty big name out there. You've got Bank of Nova Scotia, you got Workday, CloudStrike, Hewlett-Packard, and Network Appliances. Just those are the biggest by market capitalization, so some of those may be in your portfolio. And again, we're really kind of getting quiet. And then here is the big day from an economic calendar perspective. A lot of stuff happening. For the U.S., it's not that exciting. You do have some home data. You can see here at 6 o'clock in the morning tomorrow, which is going to be, let me real quickly bring this up. That's going to be BMO, which is before market opens, should be. Yes, so this is going to be at 6 a.m. 6 a.m. Eastern Standard Time. Okay, so 6 a.m. Eastern Standard Time, we're going to get HPI data and Case-Shiller Composite 20 Home Price Index. At 7, you're getting consumer confidence numbers. It seems really weird. This actually should be different. It's showing me the wrong data here, so I apologize for that. These are 7 a.m. Okay, yeah, this is Pacific time. I did see that Pepe says the Amex Platinum, but the Amex Platinum is also, I believe, $895 per year. So that's a tough one to swallow for me. I don't like fees, cards that charge me an annual fee. That's why I usually cancel them after 11 months because they give you the first year for free typically. So you have the Case-Shiller Composite 20 Home Price Index. This is going to be a big one that a lot of people, these are California times last. It was weird because my calendar was showing that it was 5:40 p.m. right now, and it's actually 2:40. So this is a mess. These are all, and I generally on this show Pacific times because this is upstairs where I'll do some trading from, so I like to have it local time. So yes, these are all going to be U.S. time, or California time, and this is the HPI data and the Case-Shiller Composite. That comes out 30 minutes before market opens, and then 30 minutes into the trading session, you also have a consumer confidence number, but really it's all about this Case-Shiller number. Look at that. Look how quick it's declining. This thing was up at 18% a few months ago. Now they're expecting it to be 10, which means housing markets is grinding to an abrupt halt, at least with market gains. Now, it's still 10% year over year, which is great. It's above the historical average. But if the trend is any indication of what's going on there, that could be a pretty ugly sell-off here. Let me show you the chart here just so you guys can see it. I'll zoom in to, here's what we have from 2017. And you can see it was just skyrocketing up. And now all of a sudden, screaming back down here. Yeah, hopefully it starts to slow down. $6.95, yeah. I can't do it, Pepe. I can't spend $6.95 on a credit card. It defeats the purpose of what I'm trying to do. I want them to pay me. So give me that first year for free. I'll take that, and I'll cancel that card in 11 and a half months so I don't pay anything. Oh, well, there you go. Yeah, active. Well, then you should be using that. And thanks for your service, Pepe. So that was it. That was economic. That was earnings calendar as well. I have no guest. Oh, yeah, I do have a guest this week, Ryan. So we were going to do the trade plan last week, but of course with Thanksgiving and everything, it got a little bit, thought it was going to get pushed to this week. Now, Ryan has strep throat, so we may not get to do it. The plan is to have Ryan on Thursday to do the follow-up. Remember, we did a session a couple weeks back talking about the importance of trade plans, why it's so important, and why you should do it. And Ryan said, hey, I have a trade plan class. I'll do 2 free trade plans. So I sent over the victors to Ryan. He's going to do a whole trade plan review on those. I'm hoping that that's going to be Thursday. It may not happen if he's not feeling up to it, but I'll let you guys know. But that's definitely going to be on the plate for at least this week or next. And then the rest of this week is just going to be me having fun with your topics. So if you got something you want me to cover, you can send them on in at TraderMerlin@gmail.com, or the best way to do that is put it down below the YouTube video so I can get to your YouTube questions. I have a couple that I need to get to for the viewers that sent in questions over the past couple of days over Thanksgiving break. There's a couple I want to maybe turn into a specific show. So there you go, Pepe. I wouldn't pay $6.95 a year. Man, there were some credit cards where you pay $6.95, but you get like access to the first class lounges at airports. Now, if you're traveling a lot, those first class lounges, that's worth it. That is well worth $695 per year. You get just that in food and drinks in those places, and some of them are 5-star accommodations. Anyway. All right, guys, that's going to do it for me. Shorter show today. Oh, not that short. We're still looking pretty good time. Again, if you have comments, questions, feedback, hit that like button, hit the subscribe button if I got anybody out there who's new, or put your topics you want me to cover for the rest of the week on the YouTube channel. Just put it down below any video, and I will see those comments and get back to you. Thank you guys so much. Have a fantastic trading day tomorrow. See you on Tuesday.